Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. It is Friday, the 25th of August, and we are going to be keeping this update nice and short. We're going to start the video off with recapping on what's going on right now in regards to the price action for the crypto space. And really, for me, it centers around the dollar, solely around the dollar. Bitcoin right now, given its lack of interest, and crypto generally, I would describe on the short term as a paper bag in the wind. There's no weight to it to stop it from getting blown around. And by weight, I mean volume and real interest, to the point where the wind, the dollar, things happening around it, like the stock market, are blowing it around, and it's just going in those directions. So for me right now, until we start to see those volumes step up, we are going into September. Selling may come back in St. Leger's Day. That is about to take place. You're about to see real volumes pick up across the board. September, typically quite a bearish month for Bitcoin. But for me, the real thing that we're watching right now is the dollar. So the Dixie, we mentioned USDT dominance, which is actually not something I was paying attention to. And the yields, they are going to drive and dictate whether Bitcoin loses that support. And of course, the dollar, if Bitcoin does lose that support, would likely, along with USDT dominance and yields, which is the driver of all of this, actually see upside from where it's at. And the Dixie is really a key level. The Dixie has been nothing but a tyrant recently. You have got to remember, and this is the interesting thing here, the trend, I believe, is still a downtrend. Don't think that you've quite broken market structure, albeit close, for the Dixie. The Dixie is still 9% down, and 9%. What's that in the crypto game? This happens all the time, but it is significant, and this does need to roll. Whether it deviates and rolls at some point soon, that's going to correlate with Bitcoin bouncing from the 25k range, or vice versa, it smashes through and Bitcoin will lose that support, and then you are looking at 20k. This is still an intact uptrend. And we do get some comments talking about how are you bullish? And you got to remember, we've been bullish since here on Bitcoin. Bitcoin's still up 46% or 56%. Not the best return in a year, certainly for crypto as far as it goes. But you got to remember, we very much stayed out up until this point and mitigated all of this and shorting things like Luna and such. So, I think that things are still A-OK for crypto. And I think there is a real possibility that it can turn around here. Again, the levels to watch is, of course, this key level here, which is your local low. You don't want to take that. You also probably wouldn't want to run where this wick to. I still do believe this is intact. And you also have structure, whether you want to look at this from a sort of stage analysis point of view, where we would say this is the breakout, this is where you've entered stage 2, volume confirms it on both, not only the breakout, but the retest. We're looking for that volume to come in. You are getting on the daily candles, 3 daily probably shows it better, a real indecision kind of candlestick. Japanese candlestick is, I think, useful to analysis is certainly useful to learn, but we need to see that momentum come in the same way that we saw it here on the retest and here on the initial break. You need to see that come in for Bitcoin to fix this. Otherwise, it's in danger. You don't just want to see a week fizzle up, because then you are in danger of doing that and putting in a head and shoulders that would not only invalidate our inverse head and shoulders, which sees us as targets to the 40 plus K, 41K. You are then looking to come down to the 20K range. And we need to start looking at the market perhaps in a bit of a different light and assessing where we're at then. So it's all about the dollar. In my opinion, Bitcoin, again, that paper bag that's just getting blown around in the wind, in the sense that it had quite a good day yesterday or 2 days ago. Did quite well, looked to want to break out, ran into this resistance, which is capping it, and sold straight off back into support. So the real question is, what are you going to do? There's just nothing behind it really at the moment, I'm afraid. And in stock market, again, if we look at the S&P as an example, it went up, came down, Bitcoin followed it perfectly. It's just a paper bag that's getting blown around in the wind. The dollar's being extremely strong. The dollar strength is interesting because I think they are generally, this is my personal take, very late on the hiking cycle. Did the dollar just get oversold and has now had an aggressive sort of pushback to it? I mean, that is a possibility. You know, the dollar actually did lose that 100 mark, which is a very key level. Round numbers play out pretty perfectly. And are you just having a technical bounce from that that's got rather overextended at a time when the stock market was already looking like it wanted to kind of pull back? Remember, we expected a pullback for the stock market. You know, you were running into very key technical levels. Not only did some of our targets get hit, but across the board, you're running into key levels. Actually, looking at Tesla, you know, is that a stage 2 breakout and now you've got a retest? I remain bullish, guys, on the markets generally. I do not believe, and we've done lots of assessment, that 2008 is going to commence now. You know, I think it will, something on the similar magnitude or March 2020 will occur, but not until the back end of 2024, potentially 2025. And actually, we've got targets across the board for this demand destructive event not happening yet that see us take the upside. And until we see invalidation of this uptrend and a reason to panic, you know, people are bearish on this after this. The magnitudes are very different in terms of this is a bull market, in my opinion, across the board. You don't need to argue with me about that. You can just go and look at the charts and see the picture that they're painting. So the story is very much the same for Bitcoin in regards to what we've outlined. It needs to hold support and the dollar needs to fail at resistance. And we can take a quick look at USDT. Dominance. You know, again, with USDT dominance, this is really what you're looking for, a break or a loss of support. And this could be at maybe a top. I don't know. It doesn't look too bad, actually, to be quite honest, USDT dominance at all. But we'll see. It's about key levels getting taken. Today's going to be rather pivotal because, of course, talking about dollar strength and everything going on, you do have Jerome Powell speaking. You've also got Jackson Hole. Yesterday, you did have the Fed's hawker say we've probably done enough. Fed's hawker, right now, Fed has probably done enough with policy. I'm not convinced. The Fed watch that they're going to just back off now. They did do it's very strange how they've done all this because they did a pause, which we were expecting, and then they did another 25 basis points. What comes next is going to be interesting, I think. I personally could see them doing another 25. I could personally also see them not. I think it's going to depend largely on a lot of data that comes in, like CPI next month, non-farm payroll. Yesterday, we had things like PMIs, or not PMIs. We had durable goods orders, which was down, weakening economy. Then we had flash PMIs down, weakening economy, so on and so forth, which could make it's a tough one. You know, I've got to be. There are times, guys, where we have to be bluntly honest and say short term, I don't have a great read. Mid to longer term, we are very, very. You know, we do assess that this is an uptrend. But short term, things have got to happen to keep that sort of intact. And where we are right now, we're looking at Bitcoin and kind of going, well, it really needs to hold support. And we're looking at the Dixie and saying, okay, well, it really needs to roll. You're going to have a beat set wrapping this month up going into September, because you're going to get a lot of volume coming back, and that's going to really propel things one way or the other. Yesterday, in regards to the dollar, we had monumental news. We had the fact that Saudi Arabia, the UAE, Egypt, Argentina, Ethiopia, all decided to join the BRICS. Now, this puts 80% of oil production in the hands of the BRICS. Now, they also have been trying to move away from the dollar and de-dollarize. We did a video yesterday where we actually looked at a paper that was written in 2020 where they talk about de-dollarizing and de-risking through smart contracts. They mentioned Ethereum and Chainlink. Are they going to go on to something? And it's my belief that the future we are moving towards is going to be one where blockchain is at the heart of it in terms of finance and this kind of what would be the right word? Internet of value. And maybe there's going to be something in that. But this is interesting and something certainly to watch. Even Yellen came out and said the dollar is losing, or the role of the dollar in certain areas is somewhat weakening. I just want to finish things off with this clip from Chainlink. And this is Richard Walker, Bain and Company, talking about just how early we are. And he talks about 540 trillion in private market assets that the global financial system don't have access to. Tokenization expands investors' access, yet only 0.01% of 77 billion of that 540 trillion has so far been tokenized. Every single thing is going to get tokenized, ladies and gentlemen, and blockchain is going to be the very thing that facilitates that. Let's go ahead and play this clip, and then I'm going to love and leave you. Hopefully, we've really outlined the plan. Bitcoin is a paper bag in the wind right now. On the short term, you need to get some pennies in that bag so that it doesn't blow around with the wind, you know? If there's a bit of weight to the bag, if there's a bit of volume, if there's a bit of narrative, then the bag won't blow around so much in the wind. But let's go ahead and play this clip, and then I will love and leave you to your Fridays.
Numbers for you: 51, 63, 30. And those numbers are in trillions. There's 50 trillion in private equity. That's, private company value. There's 160 trillion in public private debt. And there's 330 trillion in global private real estate. That's 540 trillion in assets that largely are not in the financial system. Over the past 20 years, the compound growth rate of those private assets has been roughly 4 times that of publicly traded assets. We expect growth to accelerate in private markets if they become more accessible to investors via tokenization. So it's not just a like for like of the same asset and the same market size in a digital form. This is expanding the financial system and the value of those assets. From our work, we believe that only about 77 billion has been tokenized to date. You've got a fair percentage of that, Pat and Carrie. And that 77 billion of that 540 represents about 0.01%. So it's early.
There we have it, guys. Very interesting, the world that we're moving towards. On that note, I'm going to love and leave you. You know what to look out for Bitcoin, for the dollar, which is really, again, it's the biggest gust of wind right now, and everything in between. Fed speaking at 3 p.m. UK time. Is that 10-ish, 11-ish Washington? Something like that. And there's a lot of things going on, a lot of things to watch. Short term, unfortunately, I'm a little bit uncertain. But that's just how it goes sometimes, I am afraid. See you all in the next one. Thanks a lot for watching. Have a great Friday.